All right, GM, market shenanigans, week 45. Last week, absolutely nobody watched the video. I guess because I no longer share them or anything, and they're unlisted as well. So I guess how would they even access it, right? But yeah, this is all right. At least since I only have one trade this week, I want to spend a bit of time reiterating things for myself and just walking myself through my system a little bit and, just reinforcing all of those patterns and spending some quality time refining my craft. So that's exactly what I'm going to do. So here I am in Notion, week 45, and I'm going to go over all of these instructions in detail, I guess. And then also I did draw some new stuff over here that I want to go over as well. And yeah, we'll see where this leads me. This is just sacred refining time, man. You know that saying where if you gave a woodcutter X amount of time to fuck up a tree, granted it's long enough, he's gonna spend most of its time sharpening his axe because that's what's important. And that's exactly what I'm gonna do here. So let's go over all of these. So this is actually a new one. The expectation is no trades today, no trades this week, or no trades this month. Okay. I should already be content with not having any trades. It's literally the rules that force me into trading. It's not that I'm here every day hunting for trades. The trades kind of come to me. They should almost be viewed as an annoying thing, because when something is setting up, it makes it so that I have to be present and I actually have to follow the market. Whereas if nothing was setting up, like several days this week, I would say, or a few days this week, I can just walk away and do whatever the fuck I want. And that's kind of nice. I mean, I can just live life however I want, and I don't have to sit at the computer. That's awesome. So I'm really trying to actively redefine this for myself. I'm already doing so much better, but it's still like it's so deeply ingrained, right? That hunt for the next opportunity, the dopamine hit, and all of these things. So I think it's something that is very deeply rooted, and that's why it takes some time to actually get rid of. And one of the best ways to actually ensure long-lasting change is the constant reminding yourself of it and creating new rules for yourself, new simplifications, things that make sense to you, thinking about why is it that I always revert to these behavioral patterns and just try to come up with new stuff and test that new stuff. And in my experience, I managed to figure out most of my emotional mistakes very quickly and troubleshoot them very effectively. So I believe this is going to be the same. Uh, just time and constant reiteration, and eventually it's going to sit and I'm going to be fine. But yeah, expectation is no trades. If I can be content that for a month I'm not going to take any trades, that's exactly what I need. Okay. So next one is evaluate liquidity based on the intended E time frame. For example, UK 100 is not a 10-second asset. Yeah. Honestly, that came in play this month and did come in play before once already, and funnily enough, both on UK 100. But yeah, I mean, this is a very simple rule, but a very, very effective one. If we want to trade at the super low time frames, we pretty much want to trade the lowest time frame an asset and, well, an instrument allows us to, right? So here, the UK 100 CFDs on Mint Funding, given their spread and their liquidity, um, and when I say liquidity, I mean how liquid the market is in itself, how choppy or wiki it is, or how nice it is. Well, if those deals are good, we're trying to get the lowest possible deals, right? And it just so happens that I can trade, say, NAS 100 or EU on the 10 second because the deals are good, but UK 100 not really. Uh, it's usually you get slipped quite a lot on entries, so having such a tiny stop loss is really not um, not plausible, I would say. And usually, like, you can kind of see it. The 10-second, just even if I go to UK 100 right now, over here, and we pay attention to the 10-second chart. Oh, actually, you know what? This is the wrong layout. I need to go to this one. All right. You can see the 10-second is kind of choppy, you know? Like, I don't know how to describe it, but I can see a very clear difference between, say, even for more difference on the 6 minute versus the 10-second. It's very, very different. I call this 10-second digital. I don't know why, but it looks like those digital digits on those old digital clocks. I don't know, just looks different. But yeah, anyway, I don't think I'm gonna make this mistake again, so it's alright. So this is a big one. Don't make mistakes. 1 hour per week is 50 hours saved a year, and that's more than I need for a living. Yes, absolutely. So I did this experiment on I think 100K account, and even with 100K account, if I risk, let's say, whatever, 0.5% per trade, and I accumulate 50 unnecessary losses throughout the year, that 0.5%, those losses could have paid for my entire year in terms of costs of living. Okay? So that's insane. I don't want, like, especially for a beginner trader, losses, I mean, the mistakes will be the number one thing that keeps us unprofitable. It's the number one thing that we actually have to take care of because, well, I would say it's the one that happened to everyone, right? Like it's first of all, as a trader, we need to identify edge. We have to have a good back-tested strategy that we know works. But second, we need to train ourselves as traders, as athletes almost, in a way that we need to perform and we need to make decisions on the spot under big emotional loads and we need to do the right decisions. And that can be very tricky, especially with brain chemistry coming in and all that stuff, with the amygdala starting to flare and getting you into a fight or flight response rather than staying in your prefrontal cortex and thinking about everything rationally, planning and all of that stuff. We have to learn that, and throughout the journey of learning, we are going to make a lot of mistakes, which is completely natural. We just need to understand why they are mistakes and how we can avoid them. And really, it is making mistakes that keeps people from being profitable. Like making mistakes assuming you already have an identified edge. Now, if technically if you can stick to trading just what your system tells you to, you're done, you're profitable. But it's not that easy. You might think it is, but I guarantee you are underthinking it. So, yeah, this is a huge one and I tend to still make mistakes. Well, maybe I shouldn't be as harsh on myself because not taking a valid trade, it is a mistake, but still, like the biggest types of mistake is when you take a trade that is not part of your edge or that is not based on your rules. That is the biggest mistake. That's a blunder. And those are the main mistakes to remove. Technically, if we don't take valid trades, we still, over the long run, should have the same EV. It's just going to play out slower. So the number one thing, do not take trades that don't meet your rules. This is so important. Alright, focus on the rules, not the R. This is mostly meant for results. Uh, when I go over my weekly stuff, I tend to also not see the results ahead of time and all of that, and I just do my weekly batch analysis evaluation based on how I followed rules. That's also why when I have my trades here, uh, wait, sorry. The trades are here. I usually have this hidden, so I'll bring it forward. Nope, bring to front. I have it hidden and I have it recorded as it taps me into the trade. So here, I'm only going to be evaluating this trade against my rules. That's it. I don't know the result. Like, yeah, I might remember because, well, I haven't taken a lot of trades this week. I took one and I know this is a loss, right? But still, I'm going to try my best to evaluate myself on this because this is the process. This is the deciding factor, not whether it ended up being a win or a loss. So as long as I can stick to my rules, that means that I have this part of being a trader mastered, and that is extremely important. All right, so capital preservation is my number one goal, and rules force me into trading. This goes hand in hand with the expectation of no trades. I already talked about this. So if I expect to not take trades, then yeah, my main goal is pretty much capital preservation, right? Because I'm not like obsessively trying to grow my capital. I'm actually trying to protect it. And when trades come in, when rules are met, I am forced to take on risk, which is not necessarily a comfortable thing to do, but I have to because my rules tell me to. So, yeah, this is a very good one. I've been trying to reiterate this one many times already, but I really think that uh these new ones, if I keep reading them to myself and keep like internalizing them, I'm gonna get there very soon. I'm already doing so much better. All right, laptop screen watch list is only for intended E's and V's. No point putting a C on it. Okay, yes, as it obscures the developing setups. The whole point why I have the other screen where I have my E's and V's is so that I can follow multiple markets, right? And the way I follow them, like they wouldn't be on the watch list. Oh, fuck. They wouldn't be on the watch list if they were not ready. So in a way, they already are ready and I need to follow them. And either I follow them directly on the E if they're setting up right now, or I follow them on a V because I want to see a bit more of a zoomed out version of it. And let's say I'm still waiting for some money to come in. But either way, having the C there makes absolutely no sense unless I just put it there for fun because I don't actually need all the space on my laptop watch list. Let's say if I'm only watching one market, the other three, let's say on a 2x2 layout where I have four markets watching on the laptop screen and one of them is an actual watcher, the other three, it doesn't matter if they're empty or if I have there something on the C. Like who gives a shit, right? But if I have multiple markets that I'm watching, I need to have them there on the E and the V. Otherwise, this whole process kinda is a moot point. Wouldn't serve any purpose, right? Everything serves a purpose. Mm. All right. So looking for trending markets on the 4 hour or daily. Yeah. So the logic behind this is that I want to participate in markets that are trending in one direction on a quite high time frame. And here, I think the 4 hour and the daily are really nice time frames for direction. Of course, I do consult the weekly sometimes as well, but it's the minimum required. Okay, if something is trending on the 4 hour, it's most likely a multi-day, multi-week trend, right? And that is something that I want to participate in. I don't really care about those super low time frame trends if they are happening in high time frame chop, right? Like who gives a fuck about that? It's just noise. But if I have a market identified where it's trending for a long time already and it's strong, then yeah, I don't mind. That's like proof enough for me that this market is consistently doing something, and my expectation is that it will consistently continue doing that thing. Anyway, do not trade stage one. Yeah, I don't think I have made this mistake in a long time. But I did say that in the past, I remember, and then I ended up making a few mistakes in the future anyway, so doesn't mean much. But anyway, I think I already went through so many levels of iteration on this one, and like constant reminders, and uh, yeah, this is really well internalized by now. I understand that trading in stage one, or at least for me, right, this is how I explain the system to myself and how I rationalize it to make it sense to me that I should not trade these areas. And the reason for that is I believe that stage one is like a whole different market mode. it's a market mode of going back and forth to liquidate people on both sides in order to accumulate or distribute the underlying asset. It's not markup or markdown where the whole intent of price is to go higher or lower, right? So it's very, very different. And since I'm looking for 5R fixed TP, that's quite far. I kind of need a trending market for price to reach there. So yeah, not trading stage ones. Those are garbage, man. Trade strong stage two reaccumulations. Yeah. I mean, if my whole system was to be summarized in one like little phrase, this would be it, right? This is all it is. And then I have multiple rules of like what is a strong market, what is a stage two, what is a reaccumulation, at what point are any of these things invalidated, and like it gets into really, really deep detail in the system. But if there was just one thing, this would be it. Yeah, strong stage two reaccumulations. That's it. All right, don't trade inconsistent moves. Yeah, so this is what I mean by this is when something pumps way too hard or well dumps way too hard. I'm not really looking for a continuation of that move because it's very inconsistent. And instead, what I really like to see is a consistent market that does something clear, okay? So it's the difference between, I don't know, do I have some inconsistent markets here from the past? Uh, I'm sure I can find something. Let's check it out. I'll go to all over here and I will filter for inconsistent. All right. So there's a few cryptos here that are non-consistent. Wow. I would expect more stuff. Anyway, yeah. So for example, this one, right? This, what has it been consistently doing? Chopping. It's been chopping. So I would expect that to continue, but all of a sudden, boom, big, 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 huge pump, right? It's like it's so inconsistent. Like I don't want to follow this because my expectation is that it's gonna continue doing what it did before, which is chop. So what I'm instead looking for are markets that are moving very clearly and consistently. You can almost see the waves happening over time rather than these inefficient moves. And inefficient or inconsistent also means inefficient, right? Because inefficiency or imbalance is left behind. All this means is that somebody entered the market extremely inefficiently. Like somebody here wanted to buy a big enough amount, and because he's a fucking noob and he doesn't understand how these things work and how if you eat the liquidity book, the thick part of the liquidity book, then you're gonna tap into a liquidity void and you're gonna get filled for much worse prices. If he doesn't understand that, he is going to enter the market and get punished for it. And the punishment is moving the market higher in such an inefficient way. And why should it continue? There is no proof of that. Like instead, if we saw like very strong momentum cycles, like some kind of consistent buying followed by by small selling, beautiful waves, then yes, that would be very different. I would be willing to follow that. But this just looks garbage. There's another one here. Let's see. Yeah, this is another one. I mean, look, just stage one, chop, chop, chop. And this is where it can be really tricky because I have a stage one and I'm expecting a breakout and continuation, right? But the thing is, I want to see that happen in a consistent way. I need the market to prove to me that it's now consistently doing something different that it did consistently before. And you could say, ah, yeah, but if you go to like a 10-second chart, you're gonna see beautiful waves of buying. Yeah, yeah, like maybe over here and maybe in the beginning of here, maybe there was something to catch. But this move over here, this is inconsistent as fuck. I really, really don't want to participate in this because after such a big move, I expect the market to be a little bit in shock and needing to find some equilibrium. So I do not want to trade uh, moves like this. Is basically what I'm saying. All right, what's next? If I'm already risk-free on a crypto trade, I can take another. Yeah, well, duh. I mean, this is this is true with any trade, right? If I'm already risk-free on an EU trade, I can take another EU trade. Like, duh. The reason I have it here with crypto is because I made this mistake on crypto. And I did not take a trade that I totally could have taken just because I'm in crypto. But hey, I was risk-free, so it shouldn't matter. This is crypto here is completely arbitrary. Anything else could be written here. So yeah, I just had to write it down to remind myself of that. And these days, I don't make that mistake anymore. So it's all good. All right, so those were the instructions. I went over those real quick. So let's get into the week and see what happened. So I already know that this week was really like not eventful. Mm. But anyway, so Monday, some kind of news. I do have the news here. Okay. Only thing to watch is the US stock market. Everything else looks trash. I don't take any trades. Nothing. Okay, so Monday is done. Tuesday, AUD news. Who really cares? I guess I should have included NAS 100 context since I was watching it before. I didn't, so here it is. Yeah, weekly flushed, moving higher. Daily, I think could almost be a bit overextended, but this looks like a reaccumulation. Like overall, trading this on the low time frame is fine in my opinion. And here I'm talking about 10-second trades, right? So I think this is totally fine. Nice trending market. Anyway, it all looks bad. I'll just check stocks after New York Open and no reflection. So I guess no trades taken. It's all good. Moving on to Wednesday. No news, no alarms. Oh yeah. I see. I skipped this entire day because I couldn't sleep a single minute. Apparently there was some fucking insane full moon shenanigans, and yeah, that sucked, man. I lied in bed for 8 or 10 hours. Couldn't sleep a minute, so I was very frustrated that day and not in the mood. So I just skipped the entire day because again, I noticed in the past that when I'm not well rested, it does tend to affect my decision making a lot. I do make more mistakes. So this one was quite a severe one, also a very rare one. This never happens. So I was like, you know what? Fuck it. I don't need to trade. It's fine. So I skipped the entire day. And here we go into Thursday. Some news here, mostly GBP news. I wasn't really watching GU, so doesn't matter too much. But whatever, here's the watch list. So yeah, NAS of course. Watched a few cryptos, even though I didn't really watch it. Okay, I just wanted to like pay attention and see how they develop. I I most likely would not take trades on setups anyway because there's quite significant weakness in the crypto market right now. Bitcoin just distributed on a high time frame, like on a daily and whatnot. And I'm gonna want to see some more demand step into Bitcoin before I look for relatively stronger place. Um, the reason for this is that right now there's a big difference between the crypto market and the stock market. Okay, and in case you didn't know, this could learn a lesson. Bitcoin is currently 60% of the entire crypto market. Yes, you heard that right. That's like if one stock in the entire US stock market represented 60% of the entire market. That's how crazy crypto is. So a lot of the price action of altcoins is correlated or tied to Bitcoin's price action. And if Bitcoin starts dumping, most coins start dumping even more. And actually, oh, this is beautiful. I actually have a lesson recently that it's about why certain moves on altcoins happen. I never really understood how that happens and how it's all intercorrelated, but now I understand, and I'm gonna get into it. I'm gonna get into it. Actually, should I do it right now? I think I have that in in the Friday lesson. No, no. I'm pretty sure there is supposed to be another lesson here. Why isn't there? Let me see. Lessons. Um, Okay. Could we do it by date? Yo, this is crazy. What's going on here? Um, tags, lesson. Okay. Date descending. Huh? Okay, this is very weird. I need a second. If I go into this week's gallery. Huh? Bro, I know for sure that I created another lesson this week. I know that for sure. What is going on here? Wowee. I need to get to the root of this. Yes, here it is. Why is it not there? Oh, because... Ah, I see. I need to include it like this. Huh. I see, I see. Alright, alright. Makes sense. So now I can go back here, and I should find it under Thursday lessons. Yes, yes. So, this is called forced cross-margin liquidations. So, what can happen when you have a leveraged account, right? An account that has access to leverage. You can either go isolated or cross-margin. Isolated means that each position is considered individually for liquidations. If cross-margin, your entire account is suspect to liquidations. Okay, so what can happen is that, and this is cross-margin specific. What can happen is that you have an account, let's say, and you have positions in altcoins that are leveraged. And you also have a lot of, let's say, leveraged Bitcoin. And as you have your Bitcoin and Bitcoin starts dropping down, your margin requirements skyrocket up. And whenever you need additional margin, you first close the positions that are on altcoins rather than Bitcoins. And that is when this kind of price action appears. Check it out. So here you have Bitcoin that is dropping lower, right? And as it's dropping lower, people who have people who have longs. Am I saying this right? Wait. Yeah. So this is Jelly Jelly, okay? And here he says the Jelly Jelly spikes on the chart are shorts forced to close because some of their longs are liquidated and they are cross-margined. Okay, so these are shorts that get closed. Okay, so these abrupt moves, they are basically orders that get triggered involuntarily because of the cross margin, right? And hmm, I'm gonna have to look a little bit deeper into the dynamic of how it works in terms of shorts and longs. But either way, the important thing is that these formations on the chart, they don't happen like voluntarily, like intentionally by people that they're like, oh, I'm gonna buy here. Actually, this is someone who got forced out of the market. And the key understanding here is that they didn't get forced out of the market based on this chart itself, but based on their entire cross margin situation, which includes all the other charts as well, right? And quite possibly Bitcoin, because Bitcoin is 60% of the entire fucking market. So, yeah, this was really eye-opening to me, but I'm gonna have to like understand it even deeper. Either way, eye-opening because it shows that there can be things happening in the market that don't necessarily have anything to do with the market itself, but it has something to do with the bigger picture, with the entire market, be that Bitcoin, which you might not even consider at that time, or be that, well, the risk management of some kind of huge whale on a given market that gets liquidate, what's the word? Liquidated. That gets liquidated because of cross margin. So yeah, if anything, this really reinforces the understanding that I should not um, trade multiple positions on cryptos at the same time because the losses can be so over exaggerated. Anyway, I know this wasn't as eloquent a lesson as I thought it would be. I still miss some understanding there. It's very new to me, but yeah, I will look into that. Anyway, yeah, my point here, returning to the analysis, I would not really trade either of these because these are the only two markets that are good in a like overall bad market, and I expect Bitcoin to continue being bearish for a while. So because of that correlation, I don't want to trade any other altcoins. I hope that makes sense. Anyway, back to context. I mean, yeah, we got NAS, already talked about that. We got this crypto over here called ZAC. By the way, I woke up today in the morning and I saw that ZAC is like 700. So let's just check that out real quick because that's kind of funny. So ZAC. Okay. I probably should go into this one. Boop. All right. Yeah. So here on the daily, we were somewhere over here, and it had one more leg. Like insane, insane. I just want to see this reaccumulate now on the 1 hour, and then if Bitcoin looks good, I might actually trade this higher. Insane strength on ZAC. And Dash is very similar. Yeah, but it's not as overextended like on the weekly. Like this is still insane strength, but we are now reaccumulating this entire move. That's exactly what I want to see. So if we build something up here on the 60, I'm going to continue watching that. And I also watched one stock here, which is this one, SLDP. So I will get into that because I think I ended up having a trade on it. No, probably didn't. Oh, we'll see. So yeah, it all looks bad, expecting a no trade day. Yeah, but I actually do end up taking one trade. But before that, I also have a lesson here, and this is about including supply zones in my trading. All right. Mm. So I actually wrote this to a buddy of mine. So here's what I wrote. Made a bit of a simplification to my system, finally integrating supply zones the way I like to use them. I had some previous systems drawn out, as you know, but never have I properly integrated supply zones, so there was a bit of confusion. But today I had a light bulb moment about how to simplify it, so I did. This is my favorite area to trade. I do get involved a bit later than Anton, but that's on purpose. I require a bit more confirmation than him. Let me know what you think and if you have spotted this in the market too. Alright, so I do have that drawn out over here. So yeah, this is my newest update to the system itself, and I'm just going to walk myself through it real quick. So one main thing is, well, this rule, what does it actually affect? It affects my reaccumulation rules, okay? It affects certain things that need to happen within a reaccumulation for me to be valid to trade. So what I'm really interested in is where is the sell coming from? So first, I want to define a reaccumulation, right? For me, a reaccumulation is always having a very strong push that then breaks down. And what does breaking down mean? Well, reaccumulation by definition means liquidating lows. So I need to see some lows liquidated, and that is one way to do it, but ideally, what's even nicer, especially when I require an actual reset, what I want to see is demand fail. So I want to see this uptrend clearly fail. So some kind of selling needs to come in such a magnitude that it all of a sudden looks bearish to those normies, right? So this breakdown here, this is what would make people go crazy and wanting to short from this supply, yeah? And this is where the supplies actually come in, because as people start shorting here, it creates liquidity, right? And that is the entire purpose of reaccumulation, to engineer some kind of liquidity that then can be taken for continuation. That's the reaccumulation of it, because as these people sell, they then are forced to buy it back. And that's going to allow price to move higher much smoothly and without resistances. And I actually want to wait for that. I don't want to get involved before that. Even though my expectation is that it's ultimately going to happen, I require that additional step of confirmation where I wait for this entire reaccumulation purpose to happen and break through that supply, and then I look to get involved in the next pullback. Or even on the way up on like a smaller time frame, I can follow that move. But yeah, so how do I identify this supply? So as I said before, we're gonna have like an obvious level that if that level breaks, we could call it that there's a change of character, like for a lack of a better explanation. It literally goes from bullish to potentially bearish. But bearish why? Well, we know because we understand how trends develop, bearish for purpose of reaccumulation and continuation, not bearish for purpose of bearish continuation, even though that might happen. So as that happens, I want to see where did the break come from? Where did the wave of selling come from that broke that support or that demand, the multi-touch zone that has proven in the past that there's buyers at those levels? Well, we want to see supply overpower demand, right? Because that is true reaccumulation. So as it breaks down, I'm going to look at where that is happening. Where did that sell come from? And I want to see that level broken through. I expect a stage 1 underneath now. I don't care what happens below here. I don't give a single shit. I want to see it break out first, and then I follow it. Okay, so the steps, right? We let it break down, yes. 2, we identify the supply where the breakdown came from. 3, we wait for the supply to break higher with momentum. This is extremely important. I want to see a strong break higher, and then we follow the impulse. That's it. And this whole thing is called the impulse, right? What we expect is simply the push, and then in those pullbacks, we just look for the double MBs, right? We expect a momentum cycle here. And to make it all very nice and easy to understand, I included an example here. So here we have NAS 100 on the 60. Given this is, well, I wanted to say this is not the strongest push, but it's actually pretty okay. But most importantly, it serves a purpose of illustration. Okay, so we have a strong push, and we can say, okay, this is overextended. We don't want to participate on this, so we want to actually see it fail, right? We want to see it truly reset. We want it to reaccumulate. So this is a strong push. All I'm doing here is waiting. Here, if I zoom into it, I think I can very clearly identify a demand, right? We had an ongoing push that now started going sideways a little bit, and we can see that every time price came into this level, it found buyers. There is clear demand here. So, since we have demand identified, we have a very easy way to prove that demand was overpowered by supply by getting a break of this level. At that point, we can say, hey, supply has overpowered demand at this point. And that's exactly what we want to see in reaccumulation. So now that everybody's going to be like, oh, support failed, we bearish now. Let's start shorting from the supply zone. We don't do that. But we do identify the supply zone of the break. So here, the demand breaks very clearly. And very often what you're going to see is exactly this kind of stuff. From some point, there's going to be a huge sell that just breaks that demand zone down and has continuation down for a while. And very, very often there's going to be inefficiency, which is going to define a valid supply zone. And very often that supply zone is also going to coincide with some previous resistance in form of like, you know, this level here that price can get above. It just, after you see hundreds of these reaccumulations, it's almost always the same, I would say. But yeah, also we lose momentum cycle, we lose the 50, right? All of that goes hand in hand. So we identify that supply, and now we wait because our expectation is, of course, that this is going to go sideways, potentially even go lower. We don't care. The true expectation is that we're going to get into the supply zone here after like some shenanigans and we break through it strongly. And that is when we follow, right? But here that doesn't really happen. Instead, every time price came back into it, well, the sells won and it got overpowered, so we never got our confirmation. And that means that this is so often true. Like if this move is done and we want to see a distribution, like a bigger distribution, which is going to happen very often, this is going to happen. And if you get involved into these prices, in these prices slow down here in stage one, you're going to get chopped up or you're not going to get your targets. So why not wait? And I always wait for this, always. And you might think, oh, but the free money zone is then only going to be this. But that's not where I'm trying to trade. Yeah, like the ideal spot could be trading here, but actually, like from experience, I know that if this is a move that wants to continue in a similar fashion to this move, which I expect, then the free money zone is more like somewhere over here. This whole thing is now expected, right? And I can make money on all of this. So why wouldn't I wait for that? All I have to do is skip all of this nonsense, which I will gladly do. So yeah, this is where I find edge. This is my favorite area to trade because at this point I do have a valid supply, right? Which is often going to happen. There is going to be a valid supply that then breaks through. And that is once again proof to me that demand overpowered supply. And that is exactly what I want to see as that last piece of confirmation of price movement. As it does that, I now look to either trade here already on the lower time frames, or I can wait for the reaccumulation. I don't have to, but I can, and then I get into the newly built up move over here. So what happens if we break down further? Well, there's two very important things here. Once again, at this point, we already have a valid supply. So now as it breaks lower, we always try to identify the last valid supply. So before it broke down from here, where did this whole sell came from? I would say this whole thing. This whole thing was definitely a supply. But we go lower and then we go even lower. So right now, this is the last supply. So after price breaks this supply, that's when I can get involved again, right? Uh, But there is one more very, very important thing. All of this, I'm only going to get involved in this trade over here if the higher time frame V cycle is still active, right? So during this bigger reaccumulation, so to say, I'm paying attention to how it looks, of course, and the waves and when it's valid to trade it. But I'm also looking at the higher time frame V so that the momentum cycle doesn't invalidate, so that this pullback doesn't get too deep and make like either breaks below the EMAs or even makes the EMAs start downsloping, for example. So these are two different moments that I have to pay attention to. But if we assume that this is still in a valid V, then we can definitely trade this because the expectation is still overall continuation based on the high time frame top-down analysis, right? Based on our EVC. So I can totally trade momentum up here once we have proved that demand overpowered supply. So yeah, that's how I included supply and demand in my trading. And I might refine it a bit more over time, but right now I'm really happy with it because so I had my rules without this one specific thing about supplies and demands, and like in my analysis, sometimes I would include it, sometimes not, so things became a little bit wobbly. But now that I have it really well defined, I know exactly what I'm looking for, and I think it's gonna make things much easier. And it's a very nice, simplified way, and it's like a four-step, right? Just let it break down, identify the supply, wait for it to break, and then follow the impulse. Couldn't be easier than that. All right. So that is that. And let's get into the only analysis of this week, which is this trade over here. Yeah, this one. So here's the weekly. It's some kind of stock. Oh, it's the VTYX. I had a win on this previously. Okay, so it's some kind of stock, right? Looks bearish, whatever. Creates some kind of stage one resistance. By the way, in terms of supply zones, right? We see that this last supply is over here. So the moment this breaks higher, it's pretty much proof that demand overpowered supply, right? At this point, it's clear that something has changed. And we can even see that in the EMAs. There was a stage one, everything's rising. This is looking very nice. Like clearly something bullish is happening here. When we go to the daily, lastly, we saw this reset over here, the stage one. And from there, I would say we have MMB1, MMB2, 3, and maybe this is MMB4. This might be MMB4. And I know Anton trades MMB4, so I thought I'm gonna trade it too, but maybe I'm still not sure. Maybe I'm only gonna stick to up to MMB3. But that's something to decide later. Anyway, this is very bullish, and yeah, I expect continuation here. So let's take a look how all of this looks. Some kind of very inconsistent thing happening here. So I guess I did not want to follow this move inside. No, no, I did follow it inside. Eh, I don't know. I don't know. Anyway, it does break into a new high over here, which means it's a new range, and the expectation is, of course, continuation. Here it pulls back, goes sideways, and creates a stage one. Again, we can look at the supply zones, right? Because I already used them, so I'm going to include them. This is the low. This is the next low. The highest point between those two is this point. So from here, I am just going to draw a supply zone. And I want to see price break above, which it does. And here I want to see price reaccumulate before I buy stop. And that's why I use the E-micro. And I can clearly see that some lows were liquidated here. And of course also here. So I thought, yes, this is enough proof. This is enough reaccumulation. And if price goes above, I believe it's going to continue. And I think that makes a lot of sense. But I remember then I looked into, okay, what if I want a true reset? Which honestly I didn't want. I didn't need a true reset. I wanted an MMB. I wanted continuation. So this does make sense. Because I then draw, okay, maybe I could have just identified this demand as a multi-touch demand, and I would want to see it fail, right? And then I could get involved. I don't know if that's just cope with the loss or if there's something valid about that. But either way, it's something to think about because here, uh, yeah, this is a -1. But if I go into the actual trade, what I end up doing is, yeah, I end up marking it up. This is the trade. And I was like, okay, well, maybe only after it broke over here should I actually consider getting involved. And if I got involved, I could have maybe buy stopped this. Maybe, I don't know. Or maybe I could get involved over here. But either way, it would not have ran. And to be quite honest, I don't like this E too much. Like this E looks kind of choppy. I still don't have a lot of experience with how these stock setups look like because I haven't taken many stocks yet. But honestly, like if this was anything else but stocks, I would not have traded this because it looks ugly, looks kind of illiquid. So I'm just gonna write ugly here because that's all I can see. Ugly and maybe illiquid. But again, I should evaluate liquidity based on my E time frame, right? But even if I look at the E over here, it's it's not the best, is it? It's a bit choppy. I don't know. I don't know. And I did take a trade on this previously, I think somewhere over here, which ended up being a winner. But that should not affect this at all. Maybe this was all a bit illiquid. But besides that, the whole idea behind the trade was really nice, I think. The idea itself made sense, except maybe this was overextended. Maybe overextended because it's like MMB4. Maybe. Yeah. So what am I gonna say here? C2 is in a stage 1 breakout on good momentum. That's definitely nice. C1 is good momentum, but potentially overextended, maybe. And the 60 over here, 60 as an entry, this makes sense, but looks potentially illiquid. So I'm going to say questionable. And questionable why? It's definitely choppy. It's not weak, but it's choppy. And do I have illiquid here? I don't. That's crazy. Alright, I'm gonna write illiquid. Did I tap right? Yeah. Yeah. Oh shit. Mm. I have to do it like this. Stage 1 breakout, good momentum. God damn it. Good momentum. Overextended. Yes. And entry, questionable, choppy, illiquid. Okay, so overall, honestly, like, hey, could I can take this trade right now. Do I take it? No. No, I don't. I don't. So I'm gonna rate it as a mistake. Just being really, really harsh with myself here. Like the trade idea is good, but it's illiquid and potentially overextended. There's no need to take these trades if there is almost a guarantee that something better is gonna set up. I gotta be more strict with these stocks. So overextended, choppy, and illiquid. Alright, so it was a mistake. Cool, cool. So just one trade and it's a mistake this week. Oh well, what can you do? It's something to learn. So yeah, Friday comes along. I don't think anything happens on Friday. Nope. And we have Saturday now, and I think Bitcoin looks absolute trash if I'm not mistaken. Let's just check out Bitcoin real quick. Yeah, absolute trash. So no trades will be taken on cryptos here. Okay, so we got that. I'm gonna rate this as a mistake. Oops. And that's it. It's a -1. Okay, I'm gonna go into my forward test here real quick and add the -1.2 to my data. Okay, stock. When was this taken? This week gallery. So I took this stock trade on November 6th at 1613, and it's -1.2. There we go, which moves me to a -12.5 RR drawdown right now. And yeah, the whole goal is to get out of the drawdown, right? Clearly. But it's going well. It's going really well in these last couple of weeks and whatnot. And keep in mind, this is just how I actually performed. This is not a display of what my system captured. Because if I did that, it would be insane because it captured so much. It's just me learning how to follow it. But yeah, I know my system works. It's a beautiful system. I just need to learn how to follow it to the T. Okay, so that's that. What went bad? What went wrong? So there we go. What went bad? What went well was I was fairly patient. Yeah, indeed. And yeah, honestly, just that. And what went bad? Well, that one trade that I took. Uh, traded a choppy stock. That's what I'm gonna say. So my results are minus 1.2, and had I traded perfectly, my results would be 0, I believe. So if I go here, perfect week would be 0, yeah, but my actual week was what? Minus 1.2. Yeah. Okay. Who cares about the results? Doesn't matter. I mean, I'm still just forward testing. Wondering if there was anything else I wanted to talk about, but probably not. No, this is already going to be a very long video by itself. Yeah, almost an hour. Beautiful. Just on one trade. But I did go over all of this additional stuff. And yeah, overall, I'm very happy that I had the light bulb moment to draw this out, because that's going to make my job even easier now. And as Anton recently talks in his webinars, it's a lot about limitations, right? Setting up your rules to filter out a lot of price action. Well, this rule is going to allow me to filter so much more additional price action, and I will only get involved after I have all the confirmation that I want to see from the market. And I think that's going to be beautiful. So, yeah, overall, I'm happy with how things are going. I took one trade all week. That's totally fine. Even if it's a mistake, it's whatever. It's fine. I know I'm gonna do better. Okay, that's enough for batch analysis. Some productive time, very fruitful, and looking forward to next week. Okay, peace out.